Now, as indicated earlier, the market had expected a slight uptick in CPI, which comes on the eve of outcomes from the South African Reserve Bank's Monetary Policy Committee meeting. Those outcomes will include a decision on the interest rate. Quantitative analyst at Prescient Investment Management, Vishal Rama, speaks to us now about this. Thank you so much for your time. Let's first start here. What exactly does the current inflation rate mean for an ordinary South African, especially in relation to the proposed VAT hike?
Yeah, look, firstly, thanks for having me. So current inflation where it is right now is probably quite a good thing for the average man on the street. Having said that, it's currently in the lower band of the 3 to 6% target, which sort of means that the governor should, in theory, be cutting rates, given that it's quite accommodative. But as you'll see, as I mentioned, that's probably not going to be the case, right? So, yeah.
Well, that is the expectation for tomorrow. And going back to the budget that was finally tabled earlier this month, the proposed hike of a 0.5 percentage point. How does that come into play with regards to inflationary pressure? Yes, it's slightly lower than the initially proposed 2%, but what's the correlation here in terms of an impact on consumers?
Yeah, for sure. So, I mean, that half a point, and then obviously the further point next year, half point, percentage point next year will definitely be inflationary in a sense. How that trickles down will be quite interesting to watch. And I think that is probably one of the things and the factors that will come into the SOB's decision making when they do decide tomorrow on whether they're going to hold or cut rates. And so that does put inflationary pressure back on the table, whereas you might have stuff like the stronger rand and oil, which is having disinflationary pressure. So you sort of got a balancing act that the government now needs to act on. So that will definitely come into play in terms of how they make their decision tomorrow.
A majority of analysts are expecting a hold on the side of the Monetary Policy Committee's decision on the interest rates. What's your view here, and could a hold mean that this may mark the end of an easing cycle which began last year?
Yeah, look, I mean, we expecting on our side for there to be a hold as well. Just the uncertain environment we find ourselves globally and domestically. We also saw at the January MPC meeting where the governor was quite hawkish. We also saw the split in the votes that were that the votes to keep rates where they are and the remainder to cut rates. We then saw a cut in the rates. I mean, that has shown the sort of the conservative and cautious mindset of the MPC at this point in time.
Is it then safe to say that a hold on the repo rate at the current rate and inflation remaining the same since last month is definitely a good indicator for consumer sentiment?
So, yeah, look, I mean, the rates where they are right now are very restrictive, right? And I think business and consumer sentiment will be quite low given the high cost of borrowing that they need to incur to sort of invest. So in the short term, that's probably not a best thing. But in terms of investor sentiment, I think that is quite a positive thing. And it sounds a bit weird, but in the long short term, if the SARB keep rates where they are right now, it sort of anchors inflation quite low. And, by doing that, and what that means is that the risk premium that the investors now need to attach to inflation blowing out is sort of reduced, which is a great thing for investors to come into the South African market and put their cash. So for the consumer and businesses, maybe not the best thing in the short term, but for investors, a bit of a better thing in the medium to long term.
Lastly, it's often asked how the South African Reserve Bank could play a role in cushioning financially overstretched consumers. How can that be done practically, given the mandate of the SARB, that is?
Yeah, so as we know, the mandate of the SARB is to control inflation, right? That's their number one, the mandate. So by keeping, rates where they are right now, important, but I think they need to now balance out inflation. And as I mentioned, on the one hand, we've got disinflationary pressures from the likes of the stronger rand and the fuel price coming low. on the other hand, as mentioned earlier, the higher VAT rate, electricity tariffs, and also then globally from, tariffs that we might experience from the US, that is inflationary. So now we've got a double-pronged sword, and then added to that is global uncertainty and volatility. And what that means is that SARB has a difficult decision in terms of whether to cut the whole rates, and by keeping rates where they are right now might be a good thing in terms of controlling inflation, and then in the long term might be, as the saying goes, short-term pain for long-term gain, right? So yeah.
Thank you, as always, for your input. Vishal. Rama is with Prescient Investment Management talking to us in reaction to the latest consumer price inflation numbers staying the same at 3.2% and previewing what could take place with the Reserve Bank on their decision-making with regards to the interest rate.